Welcome, everyone. This is Mariusz Skonieczny, and today I am chatting with Alan Qureshi, who is from Blue Water. Alan, thank you very much for joining me.
Oh, it's my pleasure. Thanks so much for having me.
Yeah, recently Blue Water and Voxtur merged together, or one acquired the other, however you want to call it, and you are one of the founders. You run Blue Water. I was wondering if you could give us a little history of, an introduction, who you are, how you
Sure.
started the company, so that people can get
Sure.
a better sense.
Absolutely. Thanks so much for spending time with me today, by the way. Blue Water, founded in 2018, backed by Rice Park Ventures, a prop tech fund. The core mission around mortgage assets and delivering a digital mortgage asset ecosystem that is geared towards delivering both originators and investors of mortgage assets or in mortgage assets the best possible customer journey, right? So everything we do is digital, right? So whether it's pricing assets, whether it's trading assets, whether it's due diligencing files, whether it's transferring files, whether it's creating pre-funding advice, it's all digital. So we were built to help both sides of that equation have the best possible experience. The core business started as a result of a central analytic capability around something called the mortgage servicing asset, which represents the key customer relationship in the U.S. mortgage ecosystem, right? So if you think of Fannie, Freddie, Ginnie Mae, FHA, VA, USD loans, right? There's like $11 trillion of this stuff sloshing around. The MSR is the key, right? And so as it pertains to Blue Water's core central analytic capability, we help and we started out helping investors manage the interest rate risk, pricing, and analytics and hedging of MSR. So we face a number of investors to help them manage their portfolios. That's how we started. On reverse inquiry, we got the memo asking them to build them ways, better, more efficient ways to source assets. So we have a patent pending loan level pricing engine that helps to buy assets in a smarter way, right? We have portals that allow originators to drag and drop their product, and we ingest it, we price it, we auto price it, and we send it back. Those transactions that used to take 3 weeks take 3 seconds, right? So we've been able to very quickly, very rapidly ramp up the number of efficiencies in this very key and central asset class. And we've been able to expand outside of that to mortgage loans, second lien products, and we're looking at what's called non-QM outside of the agency market ecosystem, and looking at something called scratch and dent.
Now, most of the companies, when they start and there's an entrepreneur that sees a problem and an inefficiency, and then they want to address and solve that inefficiency, was there a particular thing that you saw that made you want to address some inefficiency or problem?
Absolutely. So having been on the buy side of mortgage servicing investments and trading and pricing, what I realized very early is there was a lot of price friction and lack of price transparency, right? So that was one. The second thing that I noticed was that in order to move assets from one originator to an investor, it took a lot of time, right? So that was a pain point. Separately, with regard to how people were buying assets, there was a lot of mispricing, right? And so because of that, there was a great deal of yield slippage on the behalf of investors. And then finally, for a number of banks in the space, right, or private equity type participants, investors in the space that want access to product, uh, the time to purchase assets is inordinately long, right? Either because of third-party risk management, if you're a bank, or if you're a private equity fund, the fact that you might have an investment team with 2 or 3 people on it. So to get through deal docs with 50 originators takes a lot of time. So lining up all of these different issues, the market has been ripe for disruption in terms of delivering a better mousetrap and a better way of doing things.
Okay, and how did you come introduced to Gary, Jim, and his team from Voxtur? Um, you know, how did you get to know each other before the merger?
Listen, we're always looking for ways to broaden our ecosystem. The AOL product, the valuation product, the tax and flood certificate products, they have a natural segue to what we do, right? So every MSR transaction requires tax and flood, right? Every a loan transaction requires some sort of valuation. For every loan that's originated, right? We do new issue and we do seasoned loan transactions. They require some form of title, right? We have many originators on our platform, right? And we also manage conduits, right? Where we're able to solve some of the issues that I talked about how buyers and sellers come together. And so we have a way of connecting many originators with many investors. And so being able to drive those endpoints and connect those endpoints for something like, say, AOL is a natural fit for us, right? And so that's why it was a really exciting conversation when we were first kind of talking. Make sense?
So when you say you have the ability to connect originators with the investors, so you mean somebody originates the loan or with the mortgage servicing rights, and then they want to get it off their books, you help to connect them with investors that will take it off their books.
We don't just do the connectivity. We have pricing. So we have a series of portals, right? We have 4 different ways to transact, right? They can drag and drop their portfolio, get a price, and transact right on the wire. They can send us an email. They'll email us. We'll send back a price. They send back what they commit. That can take seconds. We do APIs where they can API directly into our central order book. And we also support correspondent execution, where an aggregator can face a number of different sellers, drag and drop their portfolio, best X, or leverage what they want to buy or sell, and commit to their platform or commit to other investors. So we have multiple touch points for originators. And on the investor side, what we've been able to do, right? For instance, if you're a small community bank, right? I don't know if you spent time in a small community bank, but it's hard for them to compete with larger banks and independent mortgage banks, right? And so for them to get customers, say in their local geo footprint, they have, there's no other way other than to come to a platform like ours, where we can adjust their pricing, we can embed it in our order book, show out that pricing, and using our technology, commit to a trade, transfer that trade through a single pipe, right? So imagine one originator can face 7 different investors with a single transfer. So that originator doesn't require any additional lift, right? Those investors on the other side face one counterparty, Blue Water, Voxtur, and all the loans are due diligenced according to their rules, and we're able to handle their specific needs. So if I'm a small community bank in, say, Minnesota, I can only buy, I only want to buy Minnesota-based loans. I now have a Blue Water, Voxtur now has a mousetrap for that. And when you think about the MSR, right? The MSR has deposits, right? So if I'm a bank that wants to have incoming customers in my local state, Blue Water has an app for that, right? It also is a long-term asset. Therefore, those are sticky deposits. Right? That's interesting for a bank. For, say, a private equity firm that might have a credit bias, right? Our order management system is able to ingest a number of different originators and their pricing and their data, figure out what they want to buy, whatever their niche requirements are, and give that originator the best possible pricing. So it's sort of like this concept of Ricardian advantage, right? Because we're able to maximize the interests of the investors while simultaneously giving the originators the best possible price, if that makes any sense. We've also simplified the overall system by making the process of transfer, which is a very arduous, people-heavy process, and making it streamlined, right? So that's the pre-Voxtur conversation. Now you start talking about post integration with Voxtur. And so we're able to offer our investors a better way of transacting through tax and flood, leveraging our data set through the Voxtur data lake. We're at a better price point than anyone else out there. And again, it's integrated already. They just have to bring their data. We've got the customers. We're able.
So you were already growing very fast because of your, and now by joining with Voxtur, you can offer even a better product.
Absolutely. We were, our growth is on a parabolic scale. And what we're able to do is bundle and provide value-added services at a better price than the existing competition. And in this market, right, and when you think about where we are right now, right, rates are going higher, originators are under pressure, right, we're able to provide a much lower cost solution than anything else that's out there, right? So we're wallet friendly for the originators who desperately need margin relief. And we're able to connect them with liquidity sources, also something they need. What I haven't told you, and I think is very interesting, is the fact that we don't charge originators by and large, right? For our core Blue Water offering. So we're able to give them free liquidity, right? Price certainty, help them with their operations so they can save money on operations and do it in a very seamless way. Enter Voxtur, right? With regard to, say, something like AOL, as something so powerful as AOL, right? Where they're able to create additional affordability outcomes, right? But they and simultaneous attachment point, right? So, Mariusz, what that means is we've got investors that have a natural desire to buy loans, that have a natural desire to buy mortgage servicing rights, that have a natural desire to buy any mortgage asset. For them to require that originators use AOL is a better outcome for the overall system. But it also is net additive, right, to the existing Voxtur sort of sales strategy, right? Because if you think of the pre-Blue Water conversation, the pre-Blue Water acquisition, the strategy has been to talk to originators directly. By leveraging the capital markets solution piece, which is what we are, right, and leveraging investors who candidly have the wallet, we're able to push the eligibility and the requirements as part of the overall liquidity conversation. So if you're manufacturing an asset, right, if you're manufacturing a mortgage asset, our investors will accept AOL. That's good, right? And they'll demand AOL. That's even better.
Well, I find it very interesting because AOL got approved by Fannie and Freddie on April 6th of this year.
Yeah.
And that was a monumental achievement. Nothing like this has been done in 75 years in title. But what I find interesting is that, the success of AOL has an impact on the value of Voxtur. And here you are, you coming in, Blue Water, and you can actually accelerate the adoption of AOL. And that's pretty interesting to me.
Yeah, listen, we've had this conversation internally, and what we think that we can provide is something that I like to call an attachment point, right? We are the attachment point for AOL, for valuation, for tax and flood, right? Because we face many originators. We drive pricing through our investors, right? And it's not because it's not because our investors are nice people. It's because our investors see the fact that the overall cost to manufacture a loan goes down. They are buyers of loans. Therefore, their overall price goes lower. So if all else being equal, if the overall asset, the overall collateral stays exactly the same, and the only thing that changes is the title, yet they pay something less, they would absolutely demand that whoever sells them that loan, that they use AOL. Right?
Well, I mean, if I am the buyer
Mhm.
of an asset like
Yeah.
a mortgage, and you want to sell something to me, and I
Yeah.
say, hey, I have two choices. The same mortgage, one with the title insurance, one with AOL. I will
Yeah.
buy the AOL. Eventually, the originators will choose the AOL because it helps them with liquidity, helps them get rid of the loan. Uh, it's I never thought of it this way. You're really opening up my eyes here. But before I started recording. We had a short conversation about
Sure.
uh, the refinancing
Sure.
and how IOL plays into this. Because for the people that are new to this, uh, when interest rates go down, the probability of refinancing goes up, and then the probability of losing the mortgage servicing rights also goes up.
Yeah.
So can you explain how AOL fits into this, and how AOL actually helps to protect that asset?
Sure. So we have investors on our platform that are private equity funds and banks that leverage some of the best in class refinance engines out there. Right. I can't name names, but the essential point is mortgage servicing represents a client connection that is tied to an interest rate. So to the extent that, say, my mortgage loan is struck at, say, 5%, for instance, or in this environment, 6 and 7/8, right? Um, if I use regular title and say rates go from 6 and 7/8 to 6.5, um, that might not be interesting to me if I get called for refinance, right? If on the other hand I use AOL, all of a sudden the execution on that loan for recapture goes to from 6.5, right, to 6 and 3/8. That's meaningful. I'll get out of bed for that, right? And all of a sudden, if my the investor that owns that loan is going to be really excited to use AOL versus traditional title. It's just math, right? So if I'm an investor, and Blue Water has a number of investors out there that are investing in the mortgage servicing asset, and the biggest risk for the mortgage servicing asset is prepayments and refinancing, right? So as an interested party, all else being equal, um, an investor would be highly incentivized. And for our part, the vast majority of our investors are like, wait, how do I sign up? Why aren't they using this already? Does that make sense to you at all?
So in other words, like, correct me if I'm wrong.
No.
If I have a mortgage servicing rights portfolio,
Mm-hmm.
and that portfolio is in the risk of being prepaid, refinanced,
Yeah.
I can refinance it myself and using AOL, and then I get to keep that mortgage servicing rights. So through AOL, I get to protect my portfolio.
Absolutely. It's a much, so again, you know, it, the moneyness of that loan goes from 6 7/8 to 6.5, right? Let's say rates drop to 6.5. What AOL allows you to do versus traditional title versus everybody else, is take your execution from 6.5 to 6 3/8, and therefore an average borrower would be much more inclined to do that loan. So as an investor, instead of me losing that loan, I get to keep that loan. Instead of me having a financial loss, I actually get a financial gain because I get a better loan, right? Because that MSR is worth more, right? So it ends up being highly compelling to ensure that my recapture partners, my servicers, use AOL. It's just a much better mousetrap.
So when you were talking about various synergies, the flood, the
Sure.
valuation, and now we're talking about AOL,
Yeah.
was your determining factor why to merge with Voxtur? Did AOL play a big part in it? And if they didn't have AOL, would your decision be different to merge or not merge?
Listen, it was a function of culture. It was a function of the management team at Voxtur. They are very like-minded in how they view the market. So that was a big piece of it. Certainly the goods and services that they're able to deliver, how agile they are, right? Listen, we do 26 sprints a year at Blue Water, right? We're 28 people. We're very efficient. We have, very high margins, right? So we run very efficiently. The team at Voxtur is very like-minded in how they see the market. That was important as well. The ability to deliver new products and innovate, super important. The specific products, AOL, I mean, it's lights out. You see the opportunity set. I mean, just with regard to so the sorts of flows that we see on our platform, right? One or two customers could be worth, call it, on $1 billion worth of MSR flow, right? That's 3,000 to 5,000 customers a month that a given originator will make, right? We see that flow a ton on our platform from a bunch of different originators. So for us, that connectivity is a no-brainer for them, and for them, our connectivity is a no-brainer for us. If that makes any sense, right? I mean,
Yeah.
the synergies are there.
Yeah, and I also find it interesting because that together you make each other stronger.
Yeah.
But also, like, just from your point of view as a business, at some point you're looking for an exit. So you could have sold Blue Water just to a separate entity for X price.
Sure.
But you chose to go with Voxtur, and I think because you're going to make yourself stronger in the long term,
Yeah.
you are going to end up much better being with Voxtur at the eventual exit than if you sold it to somebody else.
Yeah, I mean, listen, it's public, right? We took back a meaningful amount of stock because we believe in the story, and we believe, like to your point, 1 + 1 = 5. So yeah, we're committed to the story. We think it makes a ton of sense. We think with our product offering and our scale, coupled with the intellectual property that Voxtur is able to deliver, like there's no other story like us in the market. Period. Full stop.
Yeah. How is the MSR market right now? Is it hot? How is it being impacted by what's going on with the interest rates today?
So listen, the mortgage market volumes are down 70% at least, right? So that means that the flow market, which is sort of like a persistent kind of like ARR, is all else being equal lower than it otherwise should be. The ballast to that, the other side of that story, is originators are looking to raise cash, right? How do they do that? Well, they sell the portfolios that they have on the other side. That business is booming, right? So there are a lot of portfolios out there right now for sale. The existing sort of blip in the market with what's going on in the United Kingdom, what's going on with inflation, what's going on with the rapid rise in interest rates and the repricing in the mortgage market, that's caused a degree of flux around pricing. But from our perspective, our pipeline is very full, and we feel really good about the additional technologies we're bringing to bear with regard to due diligence, with regard to additional assets. When I say assets, I mean additional technologies we're bringing down the pike. Like, for instance, we're going to be offering out free ways to trade loans that will provide originators relief on how they currently transact, which is very expensive. And so by providing, again, this attachment point concept where originators can leverage our technology, they can visit our marketplace, they can visit our sort of central meeting hub where we'll offer not just AOL, but other forms of title, not just our own, right? Like leveraging a kind of overall clearinghouse for title, clearinghouse for origination services. We'll provide choice and we'll provide an ability for originators to really suss out the best possible outcomes for them, right? Because we're in that environment, right? They need a better price transparency. They need better efficiency. We're the ones to give that to them.
Wow. Well, Alan, this was a very eye-opening conversation. You really made me understand the merger a lot better, the potential AOL. So I really appreciate your time here. Is there any final thoughts that you might want to leave my listeners with as it comes to the company combined, or whatever it is you want to talk about?
Listen, I feel really strongly about the success path of this company. I think that the company is built for this sort of market. We've got a vast assortment of technologies that are built for efficiency, that deliver a highly rewarding customer journey for our customers. And because of the attachment points that we have with both investors and originators, we think that the acquisition, our acquisition by Voxtur, can potentially add an enormous amount of value.